So this is the August 2023 market update, and this isn't anything official. This is how I feel right now the Alberta market is. In some areas, it's kind of hot, maybe even too hot. Some areas, there's some people feeling it's a little bit too cool, and some areas feel it's just right. And that really depends on where you are in the province of Alberta. If you're in Calgary, things are definitely feeling pretty hot right now, but we'll get to that in a little bit. As I do like to mention, the Realtors Association of Edmonton stats come out about the 1st or 2nd of the next month. So we're sitting here on August 30th. So you can expect brand new August stats, most likely out on Friday. But we're still going to take a look at what we have for most current stats. New listings are down in the month of July compared to the previous month, June. And year to date, we've seen 22,000 listings in Edmonton. That's down 8% year over year. Right now on the market, there is just shy of 7,000 listings, and that's going to be everything on MLS. Single family, condos, you name it. When it comes to sales, we're also down from June. We're at just a little over 2,300 sales, and for the year, we're at 14,000 sales. That's actually up from last year. So in regards to average residential prices, we're just basically, I'm suggesting it's about the same. We're down a little bit from July of last year and basically flat for basically 2 months ago for June. Overall listings have also moved up a little bit to 45 days on market. So we're kind of in a little bit of a, not too much happening month over month and year over year. So this is the home price index. For those of you that have not seen this before, it's basically a benchmark of values in a particular city, town, or community of a particular type or style of property. In this case, we're looking at the Edmonton market and the GEA, which is the Greater Edmonton area. And it is a composite of everything. And so what we have is we're going year over year, so July to July, which is, again, the latest stats we have. And you can see that we're down about basically about 6 to 7% from last year. And taking a look at the next slide, which is going to be just a little look at January to July. Basically, January to July, as I've been telling a lot of my clients, we're in a slow, steady growth. Again, this is Edmonton and the Greater Edmonton area. It's basically, at least in my experience, been a little bit disappointing for sellers and a little bit disappointing for buyers. Sellers can't get the prices they want, and buyers can't get the deals they want. But it's actually been a nice, slow, steady growth, basically since January, and that's definitely different than Calgary. And we'll talk about Calgary in a little bit. Next slide, please. So inflation, Canada inflation in July moved up to 3.3. The main reason they're saying is energy prices, which was actually interesting that they said the reason why inflation went up is because energy prices went down, but energy prices didn't go down as much as they did in the previous month. And that's the amount of impact energy prices have on inflation. The other thing, and the main things that Bank of Canada are looking at are the other things that are elevated in prices, in particular grocery. Grocery inflation is still at 8.5%. Alberta inflation moved up 1% from 1.9 to 2.9 in July. The Bank of Canada is interesting. The Bank of Canada's inflation projection for Q3 is 3.3%. So based on last month, we actually have hit what the Bank of Canada is expecting over the course of the Q3. And the next Bank of Canada rate is September 6th. And the answer we got from our mortgage broker is it's 50-50 on whether or not they stay the same or move up. And I love that answer. That was great. Next slide, please. So how is this affecting Canadians? Well, electricity costs were up 11.7% in July in Alberta. And I had to read this about 8 times, and it was the truth. In Alberta, electricity costs in July were up nearly 128%. That was quite substantial. Mortgage costs year over year are up 30%. And another thing as well that I thought was interesting and had to read this over, again, it takes a bit to understand because obviously it depends on the type of mortgage product that people had signed up for back in 2018. But in some situations, people that signed up for 5-year terms on their mortgage are now within 0.25% of what they qualified for 5 years ago. Thank you. In case you didn't know, Canada's population is now 40 million. Back on June 16th, we hit 40 million Canadians. We did that by having the most amount of population increase in 2022. The first time ever, Canada saw over 1 million people introduced to Canada. About 600,000 of them were immigrants, and the other 400,000 was the positive net between births and deaths. So just a little over 1 million. And that was 2.7% market growth. The only other time we hit that, or the second highest amount of population growth, was 1957. Thank you. So Canada's housing shortfall. The next few slides, hopefully, if you've been listening to anything at all in the month of August, you're going to be hear about housing shortages, affordable housing, and that. And so this was an interesting slide that I saw, or article. Canada's housing shortfall could widen by another 500,000 units if we continue to introduce 500,000 immigrants to Canada every year. Another interesting stat that they say that for every 1% of population grow, housing increases by 3%. And they're suggesting that that's showing a consistent stat, because last year we increased by 2.7%, and the overall market has gone up 5%. And just the one last thing I wanted to point out is CMHC is suggesting that if we continue to go on the same trends of introducing housing compared to population, we're going to be short 3.5 million homes by 2030 in Canada. So there's nothing specific to talk about with this slide. I just basically wanted to introduce more about what I said before, which is that affordable housing and the lack of housing has been a big conversation in the month of August. I built this deck on Sunday, and the last couple of days, there was a lot of reports about how the city of Edmonton has been talking about what they're going to do with their housing situation, and the fact that should they focus more on infill, or should they focus more on continuing to push out into the suburbs. And typical to a long political conversation, they talked about it for several hours and decided that they couldn't solve anything and that they'll just continue to keep talking. Next slide, please. This was another interesting article that I read, that basically they're saying adding to the housing crunch is the fact that more and more housing is being turned into short-term rentals. The city of Edmonton doesn't track short-term rentals, but they're suggesting 1 out of every 4 households, about over 33,000, spend more than 30% on housing costs, and they may live in unsafe conditions. They're suggesting that basically as more and more landlords are converting from long-term rentals to short-term rentals, that's having an extra impact on our housing challenges. So something to keep in mind in regards to where we're moving forward over the next few years. Canadians continue to be Alberta bound by the tens of thousands. Basically, again, you just have to look down the highway to Calgary, and they are in a tremendous seller's market, and they continue to talk about the fact that there is our fair share of immigrants coming to Canada, coming to Canada and coming to Alberta, and they're going to go to the economic hub, which is Calgary. And then on top of that, the in-migration of people moving from BC and Ontario. And as I've said, certainly last month, if somebody can't afford a $1.2 million house at 2%, they certainly can't afford it at 6%. But they can come and afford a $500,000 house and live like a king in Alberta, and a lot of people are doing that. Calgary home sales set a new July record as they climbed 18% from last year. I just mentioned about in-migration and immigration, but of course, what happens with a seller's market? They're now in a housing crunch. And so that leads us to the idea that as houses become too expensive and there's a housing shortage in an epicenter, you start to see one of the laws of real estate, which is that ripple, and you start to see things start to move out. I was talking to an investor who focuses on central Alberta about 3 or 4 weeks ago, and he said it's starting to hit in Lacombe and Red Deer. So it's another concept that was introduced to us ages ago, which is Edmonton follows Calgary. And so if Calgary continues to stay strong, you can expect this to come to Edmonton eventually. Basically just some stats. The only negative numbers are the number of active listings and the number of days on market, but otherwise it's very, very strong market in Calgary. Just to put it into perspective, 100,000 people have moved to Calgary in the past 4 years, and they're anticipating another 110,000 moving there in the next 4 years. And then just some additional stats about how many people have come to Alberta. Again, the most of them are coming to Calgary, but eventually they will start to move elsewhere in the province. Edmonton's housing market remains among the most reasonably priced, but you can see in the middle sentence there, it's starting to hit in Edmonton a little bit more. Probably the biggest thing I took from this is that the median income in Edmonton is $134,000 a year. And you can pick up a pretty good house here for $400,000 or $500,000. In Toronto, the average income is $106,000, and it costs $1.2 million to buy an average house in Toronto. Just a quick slide in regards to the fact that there's lots of companies that are hiring. Some of those are going to be very strong income jobs. Some of them are going to be minimum wage jobs, but just the fact that a lot of people are hiring in Edmonton. Edmonton Real Estate. So this is an interesting situation, and I think a lot of people saw this potentially coming when the ICE district was being built, and then certainly it's been enhanced because of what happened in COVID with people working from their house. There is now a 25% vacancy situation in offices in downtown Edmonton. This isn't an Edmonton-only situation. This has hit Calgary as well. Especially because Calgary is a lot more of a white-collar job. I mean, basically, when oil went in the tank, the Calgary downtown market was just decimated. That was enhanced because of people working from home in Calgary or in the Calgary. And so now what they're doing in both Calgary and Edmonton is they're looking at converting a lot of this commercial buildings to residential. You can see two buildings, the Westcourt building in Edmonton, and then for those of you that know that iconic sloped building, the Enbridge building in Edmonton, that's being converted to apartments as well. We all know that, or should know that there's a challenge with the state of the Edmonton downtown, and we need more people living down there and working down there. And this article here from Corey Wozniak, who is in commercial real estate, is talking about the fact that it is coming. You've got 500 more people moving to the Stentec Tower. You've got new restaurants. You've got 200 plus people moving to the Bell Tower. There are people moving downtown. And so you've got more people working downtown. They've got more people or more places that are being converted into residential. And so there is, if somebody wants to focus on downtown, there's definitely some potential over the course. It's not going to be a quick return on investment, but it is something to definitely focus on. And then just wrapping up with, this is a great website. If you've not been to rentals.ca, Alberta is the provincial leader for annual rent growth, and Quebec is number 2. If you flip to the next slide, not surprisingly, Calgary, which is in Alberta, and Montreal, which is in Quebec, are the top 2 cities with the largest growth for rents. These next 2 slides, I think this really speaks volumes in regards to how affordable the Calgary and Edmonton markets still are. Even though we're the fastest growing when it comes to rental increases, we're still well below most other, especially major markets. Edmonton sitting at number 31 with 1,500 for a 2-bedroom. Calgary sitting at 2,100 for 2-bedroom, number 26 and 31. And if you're wondering who the top 5 are, Vancouver, almost $4,000 for a 2-bedroom, followed by Toronto, and then basically all of them. It just shows you how difficult the rental market is in Ontario right now. So to wrap up, inflation is still a concern. Well, we should all be circling next Wednesday, September 6th, as a day to watch to see what the Bank of Canada does. However, Canadians are getting used to the interest rates right now. There was a tremendous amount of uncertainty at this time last year. Nobody knew how far interest rates were going to go up. There's definitely a little bit more confidence with buyers, knowing that it doesn't necessarily seem like you're going to see any sort of huge rate increases anymore. But ultimately, you do never know. People continue to move to Alberta for jobs and affordability. And again, if it's happening in Calgary, it'll come to Edmonton. The question is when. Myself, and again, this is purely opinion and all those disclaimers, blah, blah, blah. I'm watching closely to see what happens this fall. If it drops off, then it might not come till late spring. But if we have a somewhat steady growth for the fall, the Edmonton market is hit in early January 2 out of the last 3 years. I think that there could be an opportunity for Edmonton to finally start getting going. All things being equal, sometime in early 2024, but ultimately who knows. But for us in the room who are in the buying mentality, I certainly think this is the sweet spot to be looking for opportunities right now. It's not all green lights. There's always obstacles. So continue to get yourself educated by coming to events like this, and make sure you have a consultation with your Mogul agent. Thank you very much.